Half an hour away from the opens at Hong Kong, Shenzhen, and Shanghai. You're watching the China Show. I'm Yvonne Man with David Ingles.
Good morning. Let's get to your top stories today. Investors staying on the sidelines as the U.S. trading partners in Asia and also beyond race to finalize their deals ahead of Wednesday's Trump tariff deadline.
Oil prices in focus today as OPEC announces a large output hike next month, raising fears of a global glut.
And a min low at the Hong Kong Stock Exchange at the trading debut of insurer FWD, which is raising about $450 million in its IPO. We'll be speaking exclusively with the CEO on its business outlook and why the company finally took the plunge after several shelved attempts at the IPO.
Good morning. Happy Monday morning. Welcome to the show. Lots to get through the next 2 hours or so. Risk assets, prices down, volumes are down even more. And really, it's not really exactly the best time to be taking risk right now. Although that being said, it's not exactly as if people are rushing towards the exits as we speak. There's a lot of event risk this week in the form certainly of these ever-changing contours of the trade conversations taking place. Not on your screens, and just to mention while we flip the boards, is the other story, which is an earnings story in Korea. So that market's actually on the way up. That's LG Energy lifting the Kospi index to the upside. More on that in a moment. The other big story on the weekend was certainly out of OPEC. More oil coming to this market. You're looking at Brent down about 1.2. West Texas is actually falling slightly more than we are in Brent. We're getting Shanghai, of course, coming online. And, of course, the story across the currency markets is one that's a separate one where the dollar's coming back a little bit right now, following, of course, what's really been, I would say, 7 or 8 days of weakness in the last 8 or 9 sessions. Right. The approach to the Chinese Open today is also similar to the moves we're seeing. Range-bound momentum has certainly gone away. When you look at these Hong Kong markets, we're looking at, of course, one specific listing today, which is FWD. More on that in a moment. But as Min was pointing out, soft in the gray market yesterday, I think down 6-7%. We'll watch it very closely. Dollar China 7.1664 going into, of course, the first session of the week. Yvonne.
Yep, let's get to our top story here this morning. Of course, as we count down to all these multiple tariff deadlines, it seems nations are scrambling to secure those trade deals with Washington or lobby for extra time ahead of that deadline on Wednesday. Now, President Trump says tariff letters to trading partners will start going out on Monday.
Sending letters out on Monday having to do with the trade deals. Could be 12, maybe 15. You know, Secretary of Commerce right here. And I guess, Howard, I would say it could be maybe as many as 15 or so. And they'll be going out on Monday, and some will go out on Tuesday and Wednesday, and and we've made deals also. So we're going to have a combination of letters, and some deals have been made.
Let's bring in our roundtable right now, Chief Northeastern Correspondent Stephen Ingles and our news desk editor Jill Desus. And Jill, I'll start with you. So letters are said to be going out today, and now there's an August 1st sort of deadline we have to wrap our heads around.
Yeah, I mean, Yvonne, I think this just kind of indicates how much of a moving target this has really become. I mean, it was really only a couple of days ago where we were talking about, okay, like letters are going to start going out on Friday. We don't still even totally know what those look like yet. I mean, obviously, you just heard Trump there talk about how, they're still actually in negotiations with quite a few of these countries. I think Bessent has indicated they kind of want to reach agreements with some 18 or so economies here. But then it's also unclear how much of this is going to ultimately result in a deal ahead of that, potential August 1st implementation date versus something where it's a letter from Washington basically just saying this is your new rate. The White House has tried to say, look, it's not really an August 1st deadline, but really in practice here, I think what we're looking at is, they're trying to reach some kind of arrangement ahead of, July 9th, which was the original deadline. But ultimately, obviously, it's incredibly complex to try to negotiate trade arrangements with literally dozens and dozens of countries around the world.
Well, speaking of the multiple fronts these negotiations are taking place. Steve, what's the update? What's the latest on sort of the Asian front?
I hate to talk about myself over the weekend, but I got stung by at least 15 bees as I stepped on a hive yesterday, and I was like this. Yeah. It's probably what the White House is like right now. They have at least 12 to 15 letters going out, 18 main trading partners to prioritize. But as you said, dozens more, if not hundreds more, to potentially negotiate with. I can kind of concentrate on the hives closest to us right now. India, Vietnam, Japan, South Korea, to a lesser extent, of course, but not less important, is the EU as well. They've obviously been engaging over the holiday weekend with all of these trading partners as they seek some sort of compromise, or whether it's going to be back to the April 2nd reciprocal tariff levels, which for a country like Cambodia is extremely high. We're talking 49%. Now, on the good side of that, the government in Phnom Penh essentially Friday is saying it agreed to a framework agreement with the United States. Hasn't gotten headlines yet. It's not necessarily a large economy. They say those details are forthcoming, but they sell textiles and footwear to the United States. They want to obviously bring down that 49%. Indonesia signaled its confidence. It's close to a bold agreement with the United States for critical minerals, energy, defense cooperation, market access, and Thailand is another one. Before we can talk later about South Korea and Japan, Thailand has that 36% tariff looming over its head. It's made a last-ditch effort to avoid those tariffs with offers of greater market access for U.S. farm and industrial goods and more purchases of U.S. energy and maybe even Boeing jets. There's, literally quite a few dozen bees circling around right now.
Yeah. Jill, let me chime in. Where do we know we're close to several deals? Are there some deals where we're still quite far apart yet? What are we tracking so far? Where do things stand still?
I think if you're looking in terms of ones we may be close to, India certainly has kind of felt like we've been heading that way, for a while. But again, we still don't really have a deal here. I think the Cambodia thing is pretty interesting because, again, we've got this framework of an agreement. But I would also point out that, I guess on the flip side a little bit, Trump announced a framework deal with Vietnam last week, and we still haven't seen a term sheet for that. Even going back even further, one of the countries that I think pretty much the only country that we actually saw a deal on these reciprocal tariffs with was the UK, a couple of months ago, and in that case, we had some initial announcements, and then we did get that framework, we did get some terms, but there's still a lot of issues that are still open on that front, particularly when it comes to some of those industry sectoral tariffs. I'm particularly interested in places like South Korea and Japan. Honestly, on Japan, doesn't really seem like we're close to much at all because that auto tariff in particular seems like such a sticking point. We have the Prime Minister Ishiba saying, they're prepared for all kinds of scenarios. That's when I'm watching really, really closely because I just don't see how they're reaching any kind of a deal, particularly before July 9th.
Yeah, that's exactly what I was going to segue into. South Korea and Japan are the real interesting ones here because of the two-way trade and also the issues that we're talking about. Automobile tariffs in addition to the reciprocal tariffs and the steel and aluminum tariffs in addition to the reciprocal tariffs. So you're talking about, I believe, and Jill, maybe correct me if I'm wrong, is it 25% on autos and 50% on steel and aluminum on top of the 24% reciprocal tariff that goes back to on July 9th, if it does, of 24% for Japan and 25% for South Korea. So you're talking serious levels of tariffs potentially on these two nations. And they want to see give and take. But right now it's been very difficult. I know Akazawa-san, who is the negotiators, had two phone calls with Howard Lutnick, one on Friday for 45 minutes, another one on Saturday for an hour, trying to get some common ground where they can reach some sort of delay or deal. And South Korea definitely looking for an extension, possibly to August 1st or beyond.
Jill, that's the whole discussion with the U.S. There's also Europe and China trade talks going on. It seems like we're seeing some reciprocal duties on both sides. What's going on there?
Yeah, I think that at this point, when it comes to the EU and China, so you just had the Foreign Minister Wang Yi in Europe for an extended period of time, trying to get ahead of this EU summit that's supposed to take place later this month. Although it does seem like there's part of these trips are being cut short a little bit, so still remaining some tensions between China and the EU. When you're both of these countries, obviously, Europe and China are tremendously important trading partners with each other. Europe, though, obviously faces quite a bit of pressure from its ally in the U.S. to institute trading curbs and things on China. EVs in particular has been a really big sticking point in conversations with these two nations, with the bloc and also with China. I think that, one thing that we're going to want to look out for is ultimately how those kinds of relations develop through the end of the month. But yeah, I think just kind of shows you that it's really not just about Washington's relationships with everyone else. It's also just about how they all, work with each other as well. Look at how China is trying to respond to, the U.S.'s attempts to create trading curbs that might ultimately hurt it.
Yeah.
Beijing is going in and talking to a lot of, countries, whether it be Europe, whether it be, other nations in Southeast Asia, trying to figure out how to negotiate its own agreements.
Yeah, I think China definitely wanted to make some inroads with the EU, given their difficulties with the United States and the EU's difficulties with the United States. But by the fact that they're cutting short the EU summit, which is supposed to be the 24th and the 25th, they're cutting it in half, likely, according to sources. They're not going to Hefei. They're going to stick to Beijing. The fact that Wang Yi was in Europe all week, 7 full days, and then they still came out with these reciprocal anti-procurement tariffs on medical devices. It shows there's despite their efforts, there's bad blood as well on the trade front between Europe and China. On the industrial magnets, the rare earth magnets is a big issue. EVs is a big issue. A number of different issues. Obviously, Ursula von der Leyen, the European Commission president, who's going to China for that summit, she's been very critical of the trade practices of China. So we'll have to see how that definitely plays out.
All right, Steve, thank you. Our Chief North Asia correspondent, Stephen Ingles there, and Jill Deese is our news desk editor. That's why we're watching all things medical procurement devices. We're also watching all things booze, too, this morning as well in your agenda. As we talked about, we're wrapping up that Wang Yi trip in Europe. The next one we're watching is Li Qiang at the BRICS summit as well. We talk about that FWD debut in Hong Kong here today. Still talking about honky dollar weakness and HIBOR rates as well. On the flip side, also, we're talking about repo rates that are falling in China and sectors. We mentioned medical devices, we mentioned booze, energy as well, just given the surprise move from OPEC over the weekend, Dave.
Yeah, there we go. Lots to pay attention to as we make our way into the Monday session. 19 minutes away. Coming up as well here, the head of investment advisory and advisor at Syfe is joining us to talk about market strategy and really what the key assumptions are as we make our way into the second half of this year. And speaking of this listing today, FWD, the CEO, joins us in the next hour of the China Show. Counting down to the open of trade, 18 minutes now away. Futures are doing this amidst a hot and extremely humid Hong Kong Monday morning. This is the China Show. Good morning.
All right, it is turning into a big week as well. The narrative seems to be there, a little bit of concern of a possible return of higher tariffs here. And certainly we are seeing when it comes to risk assets, that is where most of the headline risk remains here today. Still have Fed minutes coming through in the middle part of this week, I should say. Then you got RBNZ, you have RBA. It's a back-to-back sort of a central bank decisions there. And we're watching very closely inflation numbers coming through from China. That sort of deflationary trend has not quite changed. And then to wrap things up, we got BOK and Malaysia. Central banks there as well. Yeah,
the week, I think the read-through across FX markets from all these rate decisions is that, a Fed that has remained on hold, but with a weak dollar, which really is something that doesn't really jive well, usually in history, has allowed central banks in EM to cut interest rates. And what's happened is, this is really one of the things that stood out during this cycle, is that the U.S. dollar has not, of course, strengthened as the Fed has held rates. In fact, right now, the dollar index, this is the key macro chart for you, is now back to the levels when the Fed started hiking interest rates more than 3 years ago.
Yeah, certainly it's a big shift that we all had to deal with here in the first half of 2025. What does the second half bring? Let's bring in Ritesh Ganeriwal, head of investment and advisory at investment platform Syfe. He joins us live from Singapore this morning. Ritesh, it's great to have you. One of the themes that you've been tracking, of course, is this global rotation and the weakening of the dollar. What does that, what's in store for the second half then? Are we likely to see this leadership continue? Or can we see actually U.S. markets bring back and get back its mojo again?
Yeah, so one of the biggest macro stories this year has been the depreciation of the US dollar. And when you look at it from the investor lens as well, it is important to kind of like realize that the bar for when you look at the US equity market is now even higher, because all the gains that you got from the US market of around 6% were kind of like eroded away from the US dollar weakening. And you saw at Syfe, for example, we've seen clients diversify internationally into European equities, EM equities, which are up 24 and 15% respectively this year compared to just the 6% in the US. And now, essentially as the rate differential continues to narrow, we believe that the US dollar may continue its weakening trajectory. So, while you are seeing the 3-year chart, if you extend the time horizon, actually US dollar is still, expensive on a trade weighted basis. And history suggests that when such thing happens, emerging market equities tend to outperform during periods of such weakness.
So, Ritesh, do we continue to assume then that the money that's gone into Europe and other places, that simply continues?
Yeah, absolutely. See, again, I think when you look at an international investor and how you are asset allocating, it is not just a regional rotation story per se. It is about like repositioning for a very different cycle ahead. And when you look at it from a currency adjusted basis, then, obviously you need to diversify away from the US. While there are pockets of opportunities within the US as well, I do believe that investors as a whole will be better off if they are diversifying into European equities, into, the emerging markets as well.
What part of the U.S. market is still attractive then? Are there certain sectors that you still look at where, you still have to be in right now, Ritesh?
Yeah, so firstly, look, the AI investment story is still intact. In fact, it is broadening, and we are moving from the mega cap kind of hyperscalers to second order beneficiaries, such as your semiconductors, your cybersecurity, infrastructure, data centers, as well as uranium, like in the power side of things. So investors should really look to build diversified exposure to the broader AI ecosystem, and thereby kind of like reduce their concentration risk that you are observing in the major indices of the US as well, and still keep tapping into these, other new growth drivers. Beyond tech, we are also positive on select US sectors such as the industrials and the financials, which can continue to kind of benefit from Trump administration's, the pro-business policies that they have just unveiled.
Right. And Ritesh, I'm glad you brought that up, because we're trying to also figure out, in terms of Trump and their policies there, where exactly the U.S. is in its credit cycle. And I wonder what insights you might have on that.
Yeah, so look, I think overall, if you look at the interest rate side of things, obviously the Fed has been very circumspect in terms of reducing, the rates so far. But I do believe that in the second half, the Fed will become much more flexible. And if you look at inflation data, we are now on a path to disinflation. And I'm saying that because, when you look at the core PCE, it came out at 2.7%. So trending, towards that Fed target of 2%. And if you break down inflation as well, so while the goods prices have spiked due to tariffs, the services inflation is cooling down, and especially in the housing sector. So as a whole, broadly, as growth also slows down with the impact of tariffs, etc., kicking in, this sets the stage for the Fed to kind of pivot sooner and, look at the consumption side, etc., as well. And what the market is expecting and what the Fed has guided so far, we might look at, more rate cuts going forward and sooner, in fact, than what the market is pricing.
And, that seems to be an environment where fixed income might actually also do well. Ritesh, between hard currency or local currency plays, where do you think the preference is, or should be, going into the second half of this year?
So yeah, fixed income is definitely, back, and it needs to be smart though. So overall, if you're looking at fixed income and if the interest rates are going to come down, the shorter end of the yield curve is going to come down, and the longer end, while, might remain anchored. So you're looking at the steepening of the yield curve. And in terms of positioning, we really like the belly of the curve in the 3 to 7 year horizon, high quality investment grade, and on a currency hedged basis. So when as an investor, you're looking to invest into the fixed income side of things, you have to be a little bit more active to manage, these specific idiosyncrasies. And, also from a currency standpoint, I like the, local currency debt as well, given, again, the dollar weakness kicking in. So benefiting these local currency debt too. But apart from fixed income, it is also an opportunity for investors to diversify and have various sources of income. So from a Singapore standpoint, if you look at the Singapore REITs market, it is at 6% yield, trading almost like 4% above the cash rate. So that's highly attractive. And as interest rates continue to come down, that's an area where we see, opportunities coming in as well. Other than that, again, if you look at on the accredited investor side on our platform, for example, we are seeing pretty good traction on private credit. Again, there are aspects which are looking a bit frothy there, but overall, if you are looking at uncorrelated returns, this is a place. If you do the manager selection properly, then there is these attractive returns of high single digit to double digit that you can also capture.
For a non-U.S. investor, though, how important is currency hedging right now in this environment?
It's a bit tough, I guess, as a U.S. investor to do that currency hedge. But, we are seeing, from a U.S. investor standpoint as well, a diversification away, firstly within the U.S., as I said earlier, and then, on a more global basis as well. So if you look at countries such as China and India, China's allocation in global portfolios have diminished over the last few years. If you look at the all-country world index, for example, China is only like 3.5%. But if you look at China from a GDP contribution standpoint, it needs to be in that mid, teens of sorts. So we are seeing that as, the structural reforms kind of kick in China, as well as, more policy stimulus assets are, brought in, then, you're looking at that reallocation back to the Chinese and the broader EM, side of things as well. Similarly, in India, still very resilient, domestic demand story and secular growth story unfolding there too. So in terms of, again, asset allocation, we are encouraging our investors to be diversified, firstly within the US in terms of not having just those, index exposures, those mega cap tech, but also the broader AI ecosystem plus your other sector beneficiaries, and then beyond US, you're looking at the European and the Chinese and Indian equities to lead the EM side of things as well.
Ritesh, thank you so much. Have a great week ahead there. I think for once, Hong Kong is going to give Singapore a run for its money in terms of the heat and humidity there. But yeah, stay cool. Ritesh Ganeriwal, their head of investment and advisory at Syfe. Right, going into the open today, just under going into 6 minutes away. Thereabouts, 0.4% to the downside. There's a listing here, FWD. We'll get more on that in a moment. This is the China Show. Good morning. Welcome back to the show. You're looking at some live pictures coming through as well. This is almost a daily exercise of ours, given how, there we go, on your screens right now. And for those in Hong Kong, you probably recognize the faces on the stage right now. Finally, FWD is listing here in Hong Kong. Quite a substantial amount of money, 38 bucks a pop. Thereabouts. Gray market was down, and yeah, we're waiting for, of course, the trading debut, the latest one, of course, in what's been a blockbuster year. Yeah, Mr. Richard Lee there on stage, as he's been waiting for years for this listing, right? First it was an attempt in the U.S., then it got caught in these kind of U.S. try to crosshairs here, and then 3 more times they tried to list here in the city, but really there was a prolonged IPO slump. The deal never materialized here, but now we are now talking about their debut here. But yeah, it's unchanged right now. We're at 38 bucks right now, Dave. Yeah, there we go. Bonnie Chan, of course, who heads the exchange here. Plenty more ahead, including, of course, Min Min, our China correspondent, is there at the exchange. The open is just ahead. Welcome back. You are watching The China Show, and we are just a couple of seconds away, about 40 seconds away from the opening bell and the banging of the literal gong there. You see on your screens, of course, this is to mark the listing and the debut of FWD, the insurer, of course, here in Hong Kong, after several attempts to get this to get the stock listed?
Yeah, so first in the U.S., as we mentioned, then 3 more times here in the city. But, it seems like they're coming in at a time when the IPO market is really coming back. So the timing of this is quite interesting as well. And you are seeing the likes of Richard Lee there. I'm guessing he's quite relieved that this is finally going through here. So we'll see how the shares trade there. Our very own Min Min Lo is on the ground there at the Hong Kong Exchange. And certainly, once again, another IPO and listing here in the city. There you go. The gong is about to be hit.
That's how you do it. Get those hips into it. That's how you do it. I'm figuring maybe some golf helped with that. But yeah, like almost right on the money there.
Weren't they moving that gong around the city? I love that.
Yes. Didn't they have that by the harbor front?
It was a whole thing. I loved it. There you go. So things are looking slightly to the downside here right now for FWD, but we talk about, they're using this sort of proceeds from this IPO and listing for the likes of, reducing debt, maybe a little bit more expansion overseas. We're going to get that take from the CEO in the next hour as well as he joins us exclusively for that chat as well. But there you go. Bonnie Chan there, shaking hands with everybody. Certainly one thing to watch here in the Hong Kong market, but let's broaden it out a little bit to see how these onshore markets are doing at the first day of trade of this trading week as well. Obviously, there's this threat of this return of tariffs as we see all these nations racing and really hustling to try to get a trade deal with the U.S. before that July 9th deadline. Keep in mind, we're also circling that August 1st deadline, which some seem to be where some of these tariffs will take effect as well. So we're still wrapping our heads around that. I'm guessing that's what traders are really at the point dealing with as well. We're slightly to the downside when it comes to CSI 300 here this morning. Now, obviously watching what goes on in the Shanghai crude there, following what we saw in the drop in WTI and Brent this morning on the back of that OPEC Plus hike when it comes to output there, and really kind of adding to the concerns about maybe swelling supply in the back half of this year or the like. There you go. Then we're taking a look at when it comes to some of the big names as well. Not a whole lot of in terms of trends here this morning, but let's flip the boards, and we're watching very closely Hong Kong. Goldman had a pretty interesting line talking a little bit more about dividends, right? So they're saying Chinese firm dividends may rise 10% to 3 trillion yuan this year. So that whole income play is still very much there. And they've been tracking over 4,300 companies in the A-share, H-share, and ADR markets. And they're saying, look, this is still a play, and focus on old China companies, new China companies as well, but maybe more so the old China companies. Take a look when it comes to Hong Kong. There you go. We're seeing H-shares down about 1%. HS Tech is on offer here this morning. Honky dollar still very much trading on the weak end of that trading band at 784.99. And we are seeing a bit of flat renminbi right now. Keep in mind Xiaomi, we're going to talk a little bit more about that. Of course, on the back of that SUV launch last week, and certainly the comparisons on really what this means and how they were able to deliver an SUV as well. We've got that deep dive coming up in the next hour as well. But there you go. Alibaba is down some 2%, interestingly enough. Meituan also down some 3%. Let's take a look at some of these chip stocks as well. We talked about a little bit more about what's going on with what the U.S. is doing. So they're playing these AI chip curves on Malaysia, on Thailand, over some of the concerns there as well. So some of these Chinese chip stocks are actually doing quite well here today. And then we're watching oil, given just the surprise move from OPEC over the weekend here. So we are likely to see some of these energy players, there you go, heading lower here this morning, Dave.
Okay, if I could ask our producers, I know we haven't planned this, to get Meituan shares back up, please, 3690. And Yvonne just mentioned the open, they're down about 3%. The reason I think we should be paying attention to the stock, well, for one, I think this is really the competition story. Number two, on a share price basis, the last time we traded at 117 on Meituan stock, it's now completely erased all the gains, not just from when the PBOC came out with the briefing in late September, but all the way back to the start of that month. Meituan, there we go. We've now taken out 117 a pop. We're down 3.5, call it 3.25% there on shares of the platform company. More on that in a moment there. Certainly it is indicative and symptomatic, of course, of the broader conversations around competition and in the new areas of that. Right. We'll table that for now. We'll talk about this big listing here in Hong Kong and cross it over now to Min Min Lo, our China correspondent there at the Hong Kong Exchange. And Min Min, yeah, the stock is opening low.
Yes, a little bit flat at the open today, but it was trading even lower in the grey market, 6.6% down, and it's recovered a little bit. I think you can hear the cheers and the clapping around me, a lot of exuberance here. It's certainly a very big day for FWD, 4 years in the making. And of course, the attention is not just on the interest from retail investors, it's the institutional investors that FWD has managed to secure, including a Japanese life insurer as well as a unit of the Abu Dhabi Sovereign Wealth Fund, which speaks to the Hong Kong government's ability to attract international capital here. That was what Fred Ma, the chairman, was saying on stage earlier as well. Given that this is a company that actually doesn't have a presence in the Middle East, it's a pan-Asian company. Richard Lee, the son of billionaire tycoon Lee Ka-shing, was here as well. He continues to be the controlling shareholder, holding on to 66% of the shares. And our Bloomberg intelligence teams believes that there is still potential for the valuation multiple to increase, given the price today. The price to book value ratio is just 0.9 times, so quite low compared to some other insurance giants like Prudential and AIA.
Min, talk about the twists and turns. It's been a 4-year journey to get to this moment. What's the timing? Why do you think FWD is choosing to list now?
Yeah, it's a long time in the making. They first applied to list in the U.S. in 2021 in the private market, citing the size and the fluidity, the liquidity of the U.S. market at the time. But it was stalled because U.S. regulators were concerned about the risks of Beijing's overreach over Hong Kong companies. So then half a year later, FWD shifted strategy and chose to list in Hong Kong instead. But that was in 2022. You remember the economy was badly hit after COVID. The capital markets were not doing very well. It drove valuation down. And then the company decided to delay the IPO, and it wasn't until earlier this year when there was a re-rating of Hong Kong capital markets that we started to see this rebound in deals and IPOs in this city, and that could be why the company is choosing to also list now, taking advantage of the more favorable market conditions.
Min, thank you. Min Lo there, our China correspondent. We'll continue to track, of course, that stock, which is pretty calm, I guess you could say, pretty flat at this debut today. Let's get to one of our Bloomberg scoops as well. A pretty interesting one is that the Trump administration plans to restrict shipments of AI chips to Malaysia and Thailand to prevent suspected semiconductor smuggling into China. Let's bring in our technology and geopolitics reporter Mackenzie Hawkins with that scoop. And just tell us what's really going on right now.
So a couple of months ago, the Trump administration said that they were going to get rid of global semiconductor controls imposed by the Biden administration in his final week in office. And export controls are basically a requirement that you need to apply for the U.S. government's permission before you ship a certain product to a certain place. So that brought the U.S. back to another somewhat complicated arrangement where we restrict shipments to China and also to 40-some other countries that are suspected of potentially providing a pathway for Chinese companies to still access this critical technology. Now, the Trump administration has a draft rule. It's a draft. It could still change. That says in addition to those 40-some countries from a couple of years ago, which include most of the Middle East, parts of Central Asia, parts of Africa, we're also potentially going to add Malaysia and Thailand.
You mentioned, so this is still a moving target. There's still discussions here. What's next? What's next here? What are the arrangements that are perhaps taking place behind the scenes here?
So we have this one draft rule that gets rid of this global licensing requirement, goes back to the group of 40-some countries and adds Malaysia and Thailand. But the Trump administration has promised a broader replacement to Biden's so-called AI diffusion rule. That could potentially include things like conditions on overseas AI data centers. You know, under what security protocols are you allowed to import American chips? Are we going to limit the amount that can go to a particular country? All of those questions remain unanswered.
Okay, Mackenzie, thank you so much. Fantastic. Mackenzie Hawkins there, our tech and geopolitics reporter on the latest there. Right, in some other corporate headlines that we're tracking this morning here, Huynh has reported a 15.8%, very specific, percent growth here in quarterly sales due to strong demand for AI servers and iPhones. Now, the firm expects third-quarter sales to grow on-year, driven by a strong AI supply chain and potential upside to iPhone production volume. Huynh had cut its full-year revenue guidance in May due to the potential fallout from a U.S.-China trade war. Now, President Trump says the U.S. will discuss a TikTok deal with China on Monday or Tuesday, and that Washington and Beijing pretty much have a deal. Now, the information has also reported that TikTok is building a new version of its app for U.S. peers ahead of a planned sale to a group of investors. The company reportedly plans to launch the app in U.S. stores on September the 5th.
And coming up, we'll be speaking exclusively with the FWD's group CEO as the firm prepares to make that trading debut. Well, they already made it. They're here in Hong Kong this hour. This is Bloomberg. Well, China and the European Union have reportedly completed the technical portion of EV talks. Now, it's according to a social media account affiliated with state media. Now, both sides are trying to hammer out an agreement after the EU imposed steep tariffs on Chinese EV imports last year. And the bloc has alleged state subsidies gave the country's vehicles an unfair advantage.
Now, Goldman Sachs says there is no inflection in sight here for Chinese EVs, with capacity still expanding, but the caveat here is at a slower pace. Joining us from Shanghai now is Tina Ho, China Autos Analyst at Goldman Sachs. Tina, good morning. Thanks for joining us today.
Good morning.
Certainly the competition remains quite fierce, price competition. I wonder, so I'm losing count. Some of our team are losing count. Do we know how many times that they've cut prices so far year to date? Give us a broad estimate of where the dynamic is at the moment.
Right. So I think basically around every month there is around 10 models that's cutting price in terms of newly launched models or facelift models. And then also every month there are 10 new models launched in the market. So I don't blame you if you lose count or anyone lose count on that.
Can you tell us a little bit? I mean, it seems like officials are trying to crack down on this right now and really try to at least end these price wars. Have things slowed down since then?
Right. So what we saw is that at the end of May, the government has came out and urged the industry to stop the very aggressive price competition, the price cut. And it has been very effective, actually. So we track actually around 200 models dealer discount on a weekly basis, including about 130 EV models and 70 ICE models. Since the end of May, we actually saw the dealer discount actually stabilizing or even narrowing for majority of these models. So as you can see, everyone is listening to the government. That being said, that doesn't mean there isn't any price competition in the market because there are also other ways to implement the price competition. And then what we have observed in the market is through new model launches as well as through the facelift model launches. So we have seen with these new models, they are still coming in the market at very competitive pricing or at a lower price versus like last year's version.
Okay, so Tina, if the current measures are working near term, and I think you mentioned the broader economics still favor competition, do you expect the government guidance to become even more strict?
Yeah, I think that's definitely a key to watch. Will the government putting like further stricter control on these new model launches or on the facelift model launches? I think one, it will be not easy to implement because that would probably mean that you need to have a sort of price approval mechanism for every one of these new single launches. And is this interfering with the market too much? Because that's too specific. But we do understand that at the same time, there are the lower tier of the market or the laggards that are really struggling to survive in the market and maintain profitability. So that has implication to the job security and then headcount reduction implications for these companies. So I think the government really need to strike a balance between the development of the EV space as well as the overall employment as well as consumer confidence in the market.
What about when it comes to subsidies? Because it seems like those kind of cash for clunkers programs and all these things to boost consumption did, in fact, support a lot of what we saw in the sales volume for the first half of this year. There's expectation that that sort of impact is going to fade as we get closer to the end of the year. Is that your assumption now, Tina?
Right. So in fact, both the stimulus subsidy that's implemented mainly starting from the second half of last year, as well as the government intervention on pricing, has effectively delayed the inflection or consolidation timing of the auto industry in China. We have saw that subsidy has become very actually effective starting from the second half of last year. And the first half of this year, the overall passenger vehicle volume grew by 10% year over year in the domestic market, which is very strong. But we do note that that is on a low base from the first half of last year. And then into the second half, we're going to face a much higher base. And then we do expect the year-over-year volume growth to meaningfully come down to even maybe negative territory into the fourth quarter of this year. So by that time, it's very important to see whether government, they want to add more subsidy to boost further growth for the market, or are they willing to accept a negative growth into, let's say, the fourth quarter of this year?
And Tina, how then in that operating environment do OEMs manage their own cost curves? What are you seeing as far as dynamics there between maybe some of the top players and the rest of the group?
Yeah. So compared now with around 1 year ago, we actually see the cost curve among the top group as well as the bottom group started to steepen even further, i.e. the top players, they become more competitive in terms of both their volume, their cost, as well as their profitability, whereas the laggards, they are facing even more challenge. And then actually some of these laggards are SOEs with foreign JVs who are mainly exposed to the ICE vehicles. So they are the ones that are struggling. So we can understand why the government want to step in a little bit and then help with the employment and the overall stability of these SOE companies as well.
Tina, I was going to get your investment thesis here. You have a buy rating when it comes to BYD, a sell when it comes to SAIC. Can you tell us a bit more about the thinking behind those calls?
Right. I think from a top-down perspective, we're number one looking at the overall volume growth, whereas for BYD, I think not just for the domestic market, the story going forward for BYD will be mainly more focused on the export overseas market expansion, which we have seen so far this year is growing at over 100% year over year. So very strong. And then we also note that the overseas profitability for majority of the China OEMs, they are higher versus the domestic market. So we think the overseas acceleration of export business will also contribute higher margin for the company. Whereas on the other hand, SAIC, they are mainly still exposed to the ICE market. And then the ICE are the JV part are the cash cow historically for these SOE companies, but then they are losing volume and then they are losing the profitability. Whereas for the own brand or the EV brand for these SOEs, they are still mainly on loss-making territory. So relatively speaking, the exposure, the growth, and then the profitability trend for these two companies are actually quite diverging.
Tina, thank you. Tina Ho there, China Autos Analyst at Goldman Sachs, joining us from Shanghai this morning. Take a look when it comes to how these markets are doing. We are on a bit of a back foot here when it comes to equities here onshore and here in Hong Kong. MSCI China, Hang Seng is down about 0.7%. Tech seems to be dragging that lower here this morning. And onshore looking a little bit, relatively speaking, better, but still seeing some downside there. Plenty more ahead. This is Bloomberg. Well, trade tensions between the EU and China are growing. French Finance Minister Eric Lombard is calling for stronger tariff barriers as Beijing announces reciprocal curbs on EU medical devices. China is also imposing anti-dumping duties on European brandy for 5 years, while exempting major producers that commit to keeping their prices above minimum levels. But the French industry minister told us exclusively this should not be seen as a victory.
It is too early to talk about the impact because we need to assess the overall impact for the cognac industry. Trade wars only make losers. So we shouldn't be happy with what was announced today by China, even if some agreements can be found. But I think that there are a lot of jobs, thousands of jobs, that are at stake with the cognac industry. Many parliamentarians, many MPs talk to me about what happens in their constituency with cognac. And I think that we all must find a way to de-escalate this trade war with regards to cognac, but also with regards to all the tariff issues.
Another, obviously, big deadline is July 9 for the US tariffs. We may have some letters from President Donald Trump today sent about these US tariffs. Do you think that if the EU settles with 10%, is that a good deal for Europe? Should we just settle at 10% and be done with it?
No, I don't think that's a good deal. I don't think that's a good deal because previously we were at 2, 3, 4% of tariffs in many industries. And all the value chains were organized by taking into account this level of tariffs. So I think that 10% is not a good deal. And I think that we all should find a way to get back to the former situation.
Yeah, that was Mark Faraci there, French industry minister, speaking exclusively with our colleague Caroline Conan there. Right, movers to tell you about some big ones here. So China Feihe is down by a record, as much as 18% at one point. Not that 17% is any material difference there. Downgrade coming through out of Citi. The bank downgrading the stock here to neutral from buy, underscoring this weakness in the first half prelim results. And, of course, the bank also opening this 30-day downside catalyst watch on the stock.
Yeah, Maoyan as well. This is a J.P. Morgan downgrade on the film outlook. They're seeing low visibility in China's film market growth, given the weak demand in alternative entertainment formats. So there you go, the stock down some 2.5% here today. So the consumption side of things seems to be a key focus here, and we'll watch how Meituan continue to see a lot of downside there on that stock.
That's also a consumption-related stock. We'll get to that later. Plus, of course, the debut here in Hong Kong. Plenty more ahead.
Welcome back to the China Show. Here's a look at the CSI 300 a half hour into the session, and we are seeing pretty, when it comes to a little bit pressure when it comes to equities here this morning. You're seeing a little bit more pronounced of a down day in offshore, and MSCI China is down by 0.5%. But really, there's a lot of angst when it comes to tariffs. That certainly is now returning to the fray. Obviously, we're talking about the dollar as well, just given that we continue to see that weakness. And, we'll see, right? I mean, certainly we're waiting for these tariff deadlines. We're just 2 days away from the official one, but, there's a lot of moving parts and moving targets and moving deadlines as well.
I am genuinely confused with, we keep jumping from deadline to deadline, and it seems like a never-ending cycle of what's the next thing to watch, because we don't know if we're going to hit. And the deadline they keep moving the goalposts on this until maybe they get a favorable outcome as it pertains to trade. And it's happening at so many fronts that there's actually now a bottleneck, really. How much really conversations can you as trade officials actually have with multiple trade partners, right? For everything from Cambodia all the way to China, all the way to different parts of the world, Korea and China, everything in between. Meanwhile, that's taking place against, you have the several central bank decisions this week. Yvonne is pointing out the dollar story. When you look at the China story, inflation's coming out I haven't seen myself in vision for a long time. I guess it's time to do that.
Okay.
There
Not
we go.
yet. You got to talk about repo rates first.
Oh, yeah, I was about to say. The reason I brought up central banks is because, where you are with local currency rates, right? So we have inflation coming out of China this week, and markets seem to be getting ahead of what seems to be a low inflation environment still. So this one in particular, actually updated in the last hour, has now fallen to the lowest level in 2 years. FX markets are also looking at the dollar has now completely reversed all the gains, to Yvonne's point, since when the Fed started hiking interest rates.
Yeah, so you got to wonder, right? What else is in store for this dollar downtrend, right? When you have the market continuing to price in Fed rate cuts, does that mean that the dollar still has further to go? But that jobs report on Friday was quite telling as well, that we're still talking about a very strong labor market in some ways, or at least resilient labor market. And that sort of priced out a lot of possibility of maybe Fed rate cuts as early as July, and maybe putting us more in line with what the dots and what the Fed has been saying all along.
It's hard to, I was reading the note coming out of Eric Robertson and Stan Chart over the weekend. They put out that SMS, a fantastic, really, scene setter for the week. And I think one of the assumptions they're making, one question they asked is, does the dollar remain negatively correlated to risk assets? And they actually think the market is underpricing. They think dollar rates are still quite too low. So they think actually that moves up. And that's going to be the pain trade, I guess. But yeah, it's hard to figure out where we are in the cycle, right?
They also mentioned it's not enough to kind of boost a sustained recovery in the dollar. So even if rates come up.
Yeah.
So that was just quite interesting as well. Let's get to our top story now. We're talking about nations scrambling to secure those trade deals with Washington, or at least lobby for extra time ahead of Wednesday's deadline. So we've been trying to kind of focus on nation by nation, country by country, and that's really how it is, right? There are some that are actually getting letters being sent either today or tomorrow. Where we stand right now, so I think Japan is the one to watch. South Korea, our Jill Deeses was saying, where you might get something here. But Japan seems to be, they've been hitting a lot of stumbling blocks in all of this as well. India might be something that we might get a mini deal in the next 48 hours or so. So we're watching Southeast Asia, and this really is a very China-centric sort of deal when you take a look at what the U.S. is trying to do with Malaysia, with Thailand when it comes to those chip curbs as well. So certainly there's a China angle to all this too, right? And how they counter some of these flows around Southeast Asia.
I mean, the deal with Vietnam last week on trade, it's not chip specific, but you really get the sense that transshipments, they're closing the loopholes, whether that's access via, access to chips or access of, transshipped goods, of course, going into the U.S. So a lot of this really comes down to, yes, there are many fronts, but, at some point it comes down to what does the relationship look like between the U.S. and China. And that, of course, there's a framework that we understand, of course, has been agreed on, but how that actually looks. In fact, one of the other top stories I should call attention to right now on the Bloomberg terminal, I think it was out on Friday, an advisor, I think, to the foreign ministry, Chinese foreign ministry, had said the time is actually running out if the two leaders, Chinese President Xi Jinping and President Donald Trump, are to actually meet this year. Time's running out on that, I think, is the other thing altogether. So, but yes, that's just to say it's a complicated and very fluid issue out there. And meanwhile, the dollar has acted like not a haven. In fact, we were just pointing this out. At 97 on the dollar index, we're now back to the levels when the Fed started hiking interest rates more than 3 years ago.
Yeah, and U.S. policy volatility, that really has spurred demand for fixed income assets and EM currencies as well, right? You take a look at how money managers look for alternatives to, of course, dollar assets. This chart shows the performance of bonds and local currencies versus their dollar-denominated peers. And you are seeing, there is that kind of outperformance that we're seeing when it comes to local currency EM bonds. Take a look at LatAm, for example. That certainly is the beneficiary and the destination a lot of these foreign investors are looking at here right now. Let's bring in Alaa, Bushehri, head of emerging market debt at BNP Paribas Asset Management. She joins us now from Singapore. It's great to have you. Maybe I'll get your take on just, before you get to your EM outlook, your move and your call on the dollar. For one thing, Stan Chart was saying U.S. rates are too low across the curve. Do you agree with that sort of view? And what does that mean for your overall view of the dollar moving forward?
Hello, good morning. Thank you for having me.
Hi.
Our view is that we will continue to see a dollar weaker on the margin throughout the rest of this year. on the back of the tariff talks that still continue. We do expect that there is going to be an extension to the talks, given the breadth of the discussions that need to take place across multiple countries. As a result of this dollar weaker for the rest of the year, we are more positive on local currency bonds and FX across emerging markets, where they do stand to benefit from this weaker dollar moving forward.
And just in terms of, David here, by the way, in terms of the local currency plays that you mentioned, across that entire complex, help us understand where valuations are, which look the most attractive, and where might sort of the spreads be looking a bit tight at the moment there?
Well, on the local currency, we do find that jurisdictions in LATAM, for example, in Brazil, Mexico, Colombia, and even in Asia across India and Indonesia, valuations are attractive where the real rates are elevated, and you do have good external buffers and an improving growth story across those jurisdictions. We also find that there is value in the dollar part of these EM jurisdictions, where the risk reward is very attractive, with a backdrop of very strong fundamentals across some of these emerging market economies.
How are you, as a firm, looking at the return to tariffs potentially, right? If we start to see higher tariff rates than what we've been dealing with during this truce and negotiation period, should I expect spreads to start widening out? How do you think this is all going to play out?
Well, what we saw earlier this year was very much an uncertainty that was built when those trade talks were initially started earlier this year. That created a vacuum where investors were unable to really gauge where we would land in terms of tariffs. We don't expect the same sort of vacuum to be created. What we do see is that the trajectory in talks are much more friendlier and supportive to a better environment. While we don't see all talks wrapping up this week, we do see that the direction is the right one, with both parties very much willing to come to a conclusion that suits both sides. And as a result, we do not expect to see the same sort of spread widening that was a result of the vacuum that was created earlier this year. Of course, if we pivot away from this and we do see that these discussions take longer or even break down, then that would be an environment in which we could test those levels again. But that is not our base case at the moment, given the willingness that we see from both parties.
And Alaa, in what form do you think we may see mean reversion, in terms of, people are completely bearish now on the U.S. dollar, and I wonder what in particular that might reverse? Where do you think, for example, strategies would do well as far as hard currency goes?
Well, in hard currency, we are more comfortable with allocating to duration. Of course, we think that selectivity is absolutely key for investors throughout this process. So when we do take comfort in taking a longer duration positioning, it is very much on a selective basis. For example, we do like the longer duration parts of the curve in Latin America, across Brazil, Mexico, and Colombia, where we do see that the risk reward is more attractive, and we do see room for the central banks to ease moving forward and be more supportive of that asset class. They're also less subject to any sort of pivot away from the tariff talks that are taking place. And that risk reward has provides you with those valuations to take advantage of the longer parts of the curve.
We have had a lot of guests, or starting to see more guests, talk about the opportunities in frontier markets beyond just a LatAm story. What's attracting you to more of the frontier markets? I mean, obviously there's a liquidity issue, but why lean towards that space?
Well, we've had several high-yielding economies and jurisdictions that performed really well this year. Argentina being one of them. We had seen that on the back of the new government that was elected, their targets were met in terms of tackling inflation, and that, of course, was led to positive sentiment across the asset class, and we did see that perform. We do see that across other high-yielding and frontier names. It is important to highlight that last year we saw a lot of the negotiations surrounding their financing needs and them addressing their liability maturities take place, whether it was with the IMF or World Bank or investors across markets. And they started this year with, and we saw the performance last year on the back of that, but that strong footing has continued into this year, where we've seen them meet their targets in terms of growth, inflation, and has led to those asset classes performing and more insulated with towards the global macro backdrop that we've seen this year.
Alaa, final question on China. You know, a lot of people, at least here in Hong Kong, have been, let's just call it, without going into details, have been advocating income strategies without going to specific names. Chinese financials, for example. You know, some of the big platform companies in the fixed income space have been providing some decent all-in yield. What do you think about China strategies these days?
Well, the China bond market is one of the largest in the world, and when you see foreign involvement in the asset class, it is still low in comparison. So there is quite a bit of room to see inflows there. We have seen that the currency has been managed, and the curve, the rates curve, has also been managed. The PBOC has already cut a few times this year and has managed that curve really well. From our point of view, we do take a layering approach when it comes to investing in China, whereby we do take comfort in the CGB curve and the direction of yields lower into this year. We do like the pickup that onshore credit gives versus CGBs, about 100 to 200 basis points, which is attractive. And also looking at offshore China credit, where you have further pickup over the onshore credit. We do take this layering approach to really take advantage of the entire spectrum, where we do find that the policymaker is supportive and fundamentals across credits continue to be strong, which will continue to support these valuations here. So for us, a layering approach across China is one where you really get to benefit from the entire spectrum in a very supportive environment that is provided by both the PBOC and those credits with strong fundamentals.
Alaa, thank you so much. Alaa Bushehri, the head of emerging market debts at BNP Paribas Asset Management in Singapore. This Monday morning. Right, coming through, just a headline coming through right now. This looks to be from a Truth Social post from the U.S. president, that he's basically, and that's what we were expecting anyway, he is pleased to announce that the U.S. tariff letters have been sent out and that they have been delivered starting 12 p.m., I imagine, speaking local time, on the 7th of July. Yeah, plenty more ahead, I guess, on that. We were expecting those letters to be sent out anyway at this point.
So that's the timing of that, at least. And then we'll talk a little bit more in terms of timing of this latest listing. FWD, the group CEO, is joining us here in this hour to discuss the outlook for the business as well as the timing of this IPO amid the broader fundraising revival that we're seeing here in the city. This is Bloomberg. All right, if you're looking at your calendar on tariff deadlines and the like, you can add another one to your list here. So it looks like those tariff letters have been delivered, according to Trump in this Truth Social posting, starting 12 p.m. Monday. I'm guessing it's Eastern time. But yes, that's what the announcement is going to be. So we don't know to who. According to what we've been tracking, there's been still a lot of countries scrambling to secure these trade deals with Washington, or at least trying to lobby for some extra time. There's an August 1st sort of deadline as well that takes effect as well. So we got to bring in Steve to help us put everything together.
So 12 p.m. That's noon tomorrow.
Yeah.
In the U.S. Not midnight tonight or 12. Okay. So there's still a little bit more time, right? Yeah. If you're circling your calendar for these different tariff dates,
use a pencil.
Yeah, use a pencil. That's a good one. That's a good one. Absolutely. So look, he's putting out these letters. Yeah. So I think he said at the doorstop interview, a few hours ago, he said probably 12 to 15 to start, and then maybe Scott Bessent said 18 main trading partners they're in earnest negotiations with right now. I'll get to Japan and South Korea and India and Cambodia and Thailand and Indonesia in just a little bit. But again, this is coming down to the wire. Just 3 more days until those reciprocal tariffs, long threatened to go back to those original high figures. In a country like Cambodia, it's 49%. Thailand is 36%. So there's a lot at stake for these economies. Now, the BRICS nations are gathering, obviously, in Brazil. They're likely to put out some sort of statement saying, condemning the unilateral approach that the White House has taken to doing trade deals. Obviously, BRICS is Brazil, Russia, India, China, and South Africa and the like. So they have much at stake with what's happening here. China has done their own negotiation, but nothing is set in stone, obviously, with the China-U.S. relationship on the trade front. Basically, 18, as I said, 18 major trading partners, according to Scott Bessent, and several big agreements are close. He said there's a lot of foot dragging on the other side. So there's a little bit of a blame game as well, that the others are responsible for not getting across the finish line. So this is going to be a very interesting 3 days. Yes, circle everything with a pencil right now.
Yeah.
Because it could be August 1st is the shifting sands, the shifting goalposts. Use whatever analogy you want.
And I bet my unhealthy liver, there's probably a date after that we haven't yet talked about that's probably going to come up. The reason I bring that up is, the trade uncertainty. So I was speaking with some investors last week, and what matters to markets is, do we return back to the extreme days that we had, Liberation Day, or have we seen progress in some fronts, like Korea and Japan, that will, I guess, to some extent have erased that tail risk from, possibilities to consider, with uncertainty, as we can see on the screens, visually still substantially high.
Progress is a very difficult quantity or commodity to measure. It depends on whose perspective you're looking at it from. Obviously, some of these trading partners and the smaller ones who were hit with very high tariffs, I'm talking Cambodia, I'm talking India, 32%, Thailand, 36%. It's going to have to be like, of course, it was better when we didn't have those tariffs, but would 10% be better than 36%, right? So you have to see where that progress is coming. But a country like Japan and South Korea and also India, on top of those baseline reciprocal tariffs threatened to go up, they also have 25% tariffs on automobiles, okay? Those are sectoral tariffs. They also have 50% tariffs on aluminum and steel on top of the reciprocal tariffs. So they are getting hit extra hard. So Japan has had 2 different phone calls with the Commerce Secretary, Lutnick, on Friday, 45 minutes, on Saturday, an hour. And I don't know if we can say progress is being made, because Prime Minister Ishiba is saying Japan has to stand firm and defend its interests. South Korea also trying to buy time. They have a 25% possible return to that reciprocal tariffs. India also indicating that they're maybe going to hold their ground a little bit, especially when it comes to automobile and automobile parts. So it's not a done deal over the next 3 days.
Yeah, complicated. Steve, thank you. Stephen Engel, our Chief North Asia correspondent there. So still more certainty. And the other thing as well is still more oil coming to these markets. 2-day look at Brent prices right now. You had a big gap lower in the opening minutes earlier on following the announcement of a surprise increase in production from OPEC Plus going into the next month or so. Let's bring in our oil reporter, Nicholas Lua, here with us to talk us through the logic behind what, just looking at the number, Nicholas, was really a larger than expected increase in supply from the group here.
That's totally right, David. So OPEC surprised traders with a 548,000 barrels a day supply increase. That's bigger than what they were expecting. Previously, people were expecting 411,000 barrels a day. Now, that smaller figure is already triple what OPEC had initially planned to increase output by earlier this year. And I think what we're seeing is really that taps are being opened all at once, right? And that's contributing to prices falling right now.
Okay, I think even before this high, we were expecting this oil market and supply to be quite tight. How likely is this going to hold now?
So, Yvonne, I think the important thing to flag is even as prices are down, they're not down tremendously, right? We're not seeing like the sort of like dramatic moves we saw with like the first 411 KBD hike many months back. And I think that's reflecting, as you've rightly pointed out, the relative tightness we're going to see in the summer. So summer is always a period when all refineries are running at their highest because demand is up, people are driving, meaning there's more gasoline needed, and more commercial activities going on, meaning more diesel is being produced. I'd also like to flag that inventories right now are relatively tight. So U.S. Diesel inventories are really, really low. U.S. crude inventories over at Cushing are also not showing much strength. And I think that's tying to this overall picture where OPEC Plus feels that its barrels are needed. And so as it's fighting with the shale producers to reclaim market share, this seems like an optimal time to bring all those barrels it's kept out of the market back into it. Showing the prices, yeah.
Yeah, taking advantage of that summer demand. All right, Nicholas, thank you. Nicholas Lua there, oil reporter joining us out of Singapore. We got plenty more ahead. This is Bloomberg.
Welcome back. Very quickly, an earnings story lifting the shares of one of South Korea's biggest stocks, lifting obviously the index right now, and what's really been a lackluster day for risk assets. LG Energy, quite a massive beat here. 2Q profit coming in well above estimates, and as you can see, the stock is reacting, up 3%, lifting the overall Kospi index up about 2 points.
All right, we got some breaking news. Another Truth Social post from the president here. Of course, the latest was that they were going to be sending letters later on today. But what we're seeing right now is maybe more details of what these countries might get in the mail, right? So one thing that Trump has said in this post is that any country aligning with the BRICS is going to face an added 10% tariff. And at this point, they're saying no exceptions to this policy, Dave.
Yeah, and again, the question there is, well, two things. Is that, again, one of the strategies which is putting forward a unilateral threat to get people back to the table? And then the other question I have is that 10% on top of what? Additional tariff on top of what was previously on that chart in the White House lawn, or is that 10% on top of whatever they try and figure out? Or is the 10% going to go away if they figure some stuff out? Again, but that just goes to show how complicated this is, and it's now gotten, of course, the red headline coming through. There are no exceptions to this policy.
We talked about, in some ways this is an indirect, or I guess you could say now getting more direct sort of way of countering China, right? Because
it's quite clear.
It's quite clear now. How they're going to be, obviously they talked about Southeast Asia and these trade deals that the U.S. is trying to strike with the likes of Vietnam as a way to try to at least crack down on some of these transshipment of goods and how, things are being flowed through Southeast Asia, Chinese exports, and then to the U.S., right? Certainly this is one, I guess the next step is maybe assigning another tariff level to those that do deal with China, I guess, and that certainly is going to lead to another layer threat to, of course, the mainland.
And if that is being perceived the way we're interpreting it, as far as Beijing is concerned, that's not going to be good as far as the response.
No.
Now, I'm looking at just the markets right now. We are getting a bid coming across the U.S. dollar. So dollar China is now at 7.17. We had a 7.16 handle before this news broke. Dollar yen is now at 144.74. We had a sub 144.70 handle on dollar yen, and then there we go. As you can see on your screens, the dollar is catching somewhat of a bid there. So we'll keep on top of the story, but again, suffice to say, it looks like the U.S. president has laid down some key thresholds here as far as the negotiations go.
It's a moving target. It's a very fluid situation. And obviously, we'll be getting a little bit more, I'm guessing, headlines here in the next 48 hours as those letters to countries get sent later on today in the U.S. And also as we get approaching those multiple headlines, right? So July 9th is certainly one. We also heard August 1st is one that's being circled by Howard Lutnick, the Commerce Secretary, on when these tariffs actually take effect. So it's no surprise there is a bit of uncertainty and confusion in these markets here right now. Take a look at U.S. futures. We are continuing to see heading lower here, about 0.4%. And Dave mentioned there is a bit of a flight to safety into the dollar, surprisingly, as well. But yes, Asia certainly is feeling it this morning.
I mean, it's a reminder as well. And we really haven't talked at length about also the lack of progress between China and Europe, right? And the sticking points, I guess, there is...
Tensions are still there, too.
Tensions are still there. You know, conversation, the talking points around EVs, for example, is after many, many days there, we're still talking about how tariffs are coming back up.
Yeah.
As far as medical equipment, for example, I think brandy was exempted. But the reason I bring that up is, you know, just to segue us into the EV part of the conversation in China, right? Because between the EU and China, that is like BYD, for example, and its plans to increase capacity in Europe. How does that dovetail into how we now look at the competitive dynamics within the Chinese market? And we've had conversations around this earlier on with Goldman Sachs. But yes, I think the other corporate story that we've somewhat ignored because of everything that's taken place is how successful Xiaomi has been with the launch of their successful in quotation marks.
It really is a breakthrough, right? This is a company that talks, you know, we've been talking about here that's about what? It's all about gadgets. It's all about, you know, vacuum cleaners and the like, and they're able to actually break through into this very, very competitive EV space, right? And we're talking about a second now EV, which is what you're seeing there on the screen, YU7 or U7. The firm says it received, get this, 289,000 orders for the car within an hour of it going on sale last month. And take a look at this chart, right? So you take a look at how the orders are concerned, right? Versus other SUV sales volumes in China. Well, Bloomberg Intelligence thinks that new offer could widen its customer reach there and cannibalize some orders from the likes of Tesla and NIO. So the SUV is the most popular passenger vehicle in China, making up the majority of car shipments last year. All right, we got a whole in-depth look at, of course, Xiaomi's EV ambitions. Let's bring in our Bloomberg Asia tech reporter, Annabelle Jewelers, along with our Asia transport reporter, Linda Liu. Linda, I'll start with you. Tell us more. I mean, the fact that this is a tech company that really has broken through in this industry, what are the reasons for Xiaomi's EV success?
It's funny that Xiaomi has become so successful in making EVs. It actually happened by accident and kind of in timely news relating to Donald Trump's tweet. Xiaomi decided to make EVs because it was sanctioned by Trump in his first term. And even though later Xiaomi was removed from the sanctions list, it plowed on with its EV endeavor. And it's actually drew on its supply chain know-how as a large manufacturer of consumer goods, as well as an urgency that its founder, Lei Jun, has put on this entire project. He's actually said that this is going to be his last entrepreneurial project. So we can see how determined he was to make this a success.
Belle, let me bring you in. You know, I've known you several years. I don't think I've seen you as fascinated with any single company.
Oh, I know. It's
compared to Xiaomi as you've been recently.
And that's why I'm so excited about this story. I mean, I think 1810 HK has had an absolute stellar run. And if you were to look at the performance over the last 12 months, I mean, we're up around nearly 250%. And to Linda's point around Xiaomi having this great success, it really does contrast to what you've seen from Apple because, of course, they had their decade-long effort to try and invest in this space. But couldn't do so and eventually had to abandon the program. I think as well in terms of this progress forward in this area really should also be something that challenges the Western car makers, because even though, you know, the YU7, for instance, its other models aren't available for sale just yet in Europe, certainly when I've spoken to Alan Lam, for instance, the CFO, he's kind of nodded that ultimately they may go in that direction. And when you have these sorts of features that can go into these cars, that sort of design, which is maybe a few points for originality, but still a nice design that's similar to what you see from Ferrari or McLaren, for instance. The price point is very cheap as well, because the entry one for the latest model is around $35,000. So again, it does point to a very competitive car, and that's of course why it's doing so well.
Okay, so Belle mentioned a bit of the copycat allegations. Linda, maybe follow through on what else you see in terms of the challenges moving forward for Xiaomi.
Yes, so the copycat allegations aside, Xiaomi is actually facing increased regulatory scrutiny. This came after a fatal accident that involved one of its SU7 sedans crashed while it had the car's advanced driver assistance technology turned on. So this led to Chinese authorities really tightened the promotion as well as deployment of this technology, as well as other safety aspects of EVs. So Xiaomi kind of have to tread carefully as they continue on this EV making journey. And also in terms of geopolitics is the headlines today. If Xiaomi wants to go international, it needs to contend with tariffs, which are already in place in regions like the EU, not to mention the US and Turkey. So Xiaomi definitely, as it expands, kind of need to extend its success to really take on these challenges in the future.
Okay, well, there's something coming up. I think more on this in a moment. But yeah, give us a sense of what's happening, and if our viewers might have missed some of the things that you just mentioned here, what's in store?
Well, yeah, if you've missed it or if you're just interested to get more into the details, we do have a Q&A coming up on Bloomberg.com in about 20 minutes time from now. So Linda will be in that. I'll be moderating it alongside a couple of other colleagues from the print side. But the focus of this is how Xiaomi succeeded where Apple failed. And so, again, it's making that point. Apple had this Project Titan. It failed not just because they weren't really capable of making an EV, I guess, but the goals of it were very lofty. The metrics were also constantly changing for the business as well. So it's making that comparison. How did Apple not manage to come up with a project over 10 years or a car? And how has Xiaomi been able to do this in the space of, a much shorter time frame?
Yeah, and whether it can be replicated. Great stuff there. Annabelle Jewellers, our Bloomberg Asia tech reporter, also our Asia transport reporter, Linda Liu. You don't want to miss this one here. If you didn't get enough of this and you want to hear more,
I'm done,
subscribers, you can join a live Q&A later on discussing how, yes, as we've been talking about, that very topic, Xiaomi succeeding in EVs where Apple failed. That's coming at 11 a.m. Hong Kong time. Join the conversation on the terminal or through the web link on your screen right there. Screen grab it while you can. All right, we're checking FX, Dave.
Yes.
What's going on?
So let's say about 8-9 minutes back, the U.S. president, Truth Social, posted two things, right? One was letters are being sent out. The other one, I think, which is a separate post, but still same story, was that anyone that aligns with BRICS will get an additional 10% tariff. And we're getting already a market reaction to this. The dollar is bid, and we are seeing the likes of the South African rand, as you can see on your screens, on offer, quite literally on the back of, you spell out BRICS, and I think that's really what you get. Dollar China right now, near session highs. There's the context for you from the U.S. president just earlier on.
We had to rush Steve back to the studio to react to all this here. But yes, this latest line, your take.
Yeah, I'm used to being called back. That's okay. It's good to be called back. Basically, Donald Trump saying there will be no exceptions to this policy. And essentially that is, he is saying that any nation that aligns with what the BRICS is doing as far as what Donald Trump calls anti-American policies, meaning this condemnation they've already done, the BRICS nations which are meeting in Brazil, led by the president there, Lula, essentially condemning the attacks on Iran because Iran is now a member as well of BRICS. And Also, they are going to be condemning the unilateral approach they see of tariffs on the United States, basically setting the trade policy agenda for the world. So again, Donald Trump says there will be no exceptions to this. We'll add essentially a 10% tariff for those countries aligning themselves with anti-American policies of BRICS. Keep in mind, BRICS is not just Brazil, Russia, India, China, and South Africa. Recently, they expanded to include Indonesia, Ethiopia, United Arab Emirates, Iran, Egypt as members. So this is a lot broader threat, potentially an extra 10%, as a number of different countries are obviously trying to negotiate down the threat on July 9th, 3 days from now, 2 days from now in Asia, essentially the return to the reciprocal high tariffs.
Okay. Stephen Engel, our Chief North Asia correspondent there. Right, just ahead here in the show, just a pivot to the other story we're tracking today, this listing here in Hong Kong. FWD and the CEO will be joining us in a few minutes as they finally list on the main board of the stock exchange here. This is Bloomberg. Welcome back. You're watching The China Show. So you have on your screens coming up shortly, there we go, insurance firm FWD debuted in Hong Kong today. Stock is unchanged at 38 bucks. Joining us exclusively here on set to talk us through what they plan to do with all this new money, Huynh Phong, of course, is the group CEO of the company. Very nice to see you. Good morning.
Good morning, and thank you for having me here.
I feel like we've been counting down to this listing several times over the last several years now, and finally we're here. What changed for you? Why was this timing right?
Thank you. You tell me. This has been a long journey, but we're extremely happy to be here. And Hong Kong, as you can see, is back in a big way, and we're extremely happy to be part of that coming back story post-COVID. And for FWD, choosing Hong Kong as the exchange to be listed on is a natural choice for us. We were born here 13 years ago with 3 markets, and now after 13 years, we're across a number of markets, 10 markets across Asia, Pan-Asian, truly Pan-Asian. And then to come back here and celebrate listing today is so meaningful for all of us.
Yeah, it's certainly been a roller coaster. But the first attempt was in the U.S. and then 3 other attempts here in the city. How does this time compare with the previous attempts?
This is I'm still very emotional about ringing the gong this morning, so you have to excuse me for losing my speech a little bit here. But it's a fantastic feeling to be here, to be home. And I think the market condition is we couldn't ask for more. And our business, if you look at the last 3 years, has been fantastic. It's the momentum very strong. So choosing this time to go listing, it just is very meaningful and very exciting for all of us.
Yeah, I think we're playing the video again in loop here for our viewers to see that this moment that you mentioned, you're getting somewhat emotional over. Now that that's done, you bagged the money. What have you earmarked this for, and how does it go into your expansion plans?
Sure. I think the key thing for the IPO with this new flexibility in terms of financial. Now, as management team, we can look at different options and go to our board. If you look at us in the last 3 years, 97% of our growth is actually organic. So continue to grow organically, support that growth very profitably. I think that's very high on our priority. Of course, the balancing of our balance sheet in a way that makes sense in terms of our leverage ratio and so on. That's certainly something that the board will look at. And of course, the last but not least is if there's opportunity for us to add into our scale, either in the markets that we are already operating in to get to that leadership position.
Yeah, you mentioned Pan-Asia. You have a strategic focus in Hong Kong and Japan and Southeast Asia. Is the plan now to further deepen your presence in those markets, or are you looking elsewhere?
I think when we set out, we want to build a Pan-Asian, as you mentioned, and the market that we chose to operate in, we're pretty much in. Of course, the exception, we would love to get into China eventually. But in Southeast Asia, on the key markets, if you look at on the populous markets of ASEAN, we're already in. There's a few smaller markets that we have a lot less interest. So the key for us going forward is how to deepen our presence and how to get into the leadership position across these markets. At the moment, we are in the top 2 in several markets, including Thailand, we're number 2, Indonesia, we're number 2. Philippines, depending on what month you look at, will be number 1 and number 2. so that sort of leadership in each of the markets is important, and we will focus on that.
And you mentioned organic. You also somewhat alluded to, you're looking at potentially non-organic options. Would you be open to M&A? Like, which specific assets might you be considering if you want to solidify and not a month-to-month look at your leadership position?
That question I will defer to my board. But we continue to look at the opportunity that makes sense. Because, as you know, life insurance is a scale business.
Right.
And we continue to build that organically. But if there are opportunities that can give us additional scale that makes sense, we certainly go back to the board and make the case for that. Because that's helped us to get to that leadership position again.
You mentioned China. FWD, currently you don't have a direct business in mainland China, unlike some of your rivals like AIA, like Prudential. What are some of the plans in place right now? I mean, do you have a plan in place in terms of the strategic focus in mainland?
Thank you. And we do have a rep office in China since 2014.
Okay.
So we certainly continue to study the market. And over the past years, we look at several opportunities. But for us, China and the same with across Asia, we prepare to walk away from opportunities that does not make financial sense. And that's always have to be the way we do business to deliver the right return to our shareholders.
I mean, is it accurate to describe it that China is not that urgent for you?
Yeah.
I think
just by the tone.
One of the key things for us is we headquarter here in Hong Kong.
Okay.
And Hong Kong, the proximity to southern China with the connectivity into Greater Bay Area, we're in great position to tap into the whole ecosystem of life insurance in China. And as you can see, the whole industry, life insurance, in the past years post-COVID, have benefited greatly from the connectivity to southern China. And we are very fortunate to be in that position. So we will continue to push really hard here in Hong Kong.
Okay. I was looking at the investment side of things. I mean, obviously, there's a lot of talk of your asset allocation plans. What sort of strategies are you looking at right now? Has there been any changes of late?
As we go prepare to go public, of course, we are a life insurance company with a long-term promise to our customers. We're talking about 30, 40 years promise here.
Right.
So the allocation for asset, the liability matching between our policy that we sold and the asset that we invest, we have to be very careful and we have to manage our risk very tightly. And that go across all the markets in Asia. So not unlike other insurance company, our asset allocation highly reflects the nature of our liability that we have on our book, which is the policies that our customers across the region. There's 30 million of them that we have to look after. So we are quite pay a lot of attention on risk management when it comes to asset.
I have a final question for you. I was looking at the prospectus, which is always long. There's a list of risks, obviously, that backs. I think it's deliberately also to discourage journalists from poring over it too much. The font size was also too small. You can tell that to your bankers. But among the many risks there, what is the one risk that you're looking to manage? As people buy into your stock, you're not a public company. What do you think people should be paying attention to there?
I think when people ask me what I lose sleep at night over managing a group like FWD, I think for us, the geographic expansion, the hard work in building distribution, the investment in digital and tech that carry out the operation efficiently, all those things, execution, and we can focus and we can deliver. Underlying all of that is the people. And that's one of the reasons why we basically headquartered here in Hong Kong is that very important element of human resources. I think if we don't have the right people, it's going to be very hard to deliver the promise that we have with our customers. And that's why we're very happy today to be ringing the bell here in Hong Kong. This is the best place in Asia to build a pan-Asian insurance group.
Phong, it's great to have you. Thank you so much. Phong there, FWD Group CEO, joining us here in our Hong Kong studios just shortly after that listing debut in the Hong Kong Exchange. We're checking when it comes to currencies here this morning, particularly when it comes to some of these BRICS nations after what we heard from President Trump in that Truth Social post that they could be adding a 10% tariff on any country aligning with the BRICS nations there. So you are seeing that weakness across the South African rand, the Chinese currency here this morning. We're talking about a 717 handle as well. And the dollar still catching a slight bid this morning. And we're learning here also Thailand has sent a revised trade proposal to the U.S. That's according to the minister there as well. We got markets opening up there in a few minutes. Plenty more ahead. This is Bloomberg. All right, we are starting to see a little bit of movement and price action in the FX space as well as we just talked about here. So President Trump, of course, still has about 48 or so hours until that July 9th deadline. And, we are hearing a little bit more on what these letters to countries might look like here. And maybe possible now. They're talking about a 10% tariff added for any country aligning with the BRICS nations.
And you are actually seeing, to Yvonne's point, currencies within those circles being on offer right now. So, yep, we still don't know what the parameters will be, but we kind of have an idea now what the limits could be as far as where you should be aligning yourselves. If you're at BRICS, 10%, no exclusions to that. Plenty more ahead. This is Bloomberg.